I am going to go through why Alibaba is one of the best stocks to buy right now. Hi, this is Mosh. I'm an amateur trader and investor. This is a solutions-based channel. Anything I learn, I teach you guys. Today is another stock analysis. We're going to do it the same way where we break it down into three parts: fundamental analysis, technical analysis, and sentiment analysis. I'm going to do analysis of each category. And remember, I'm not a financial advisor. These are my own opinions, my own thoughts, and this is for entertainment purposes only. If you watched my previous Rolls-Royce analysis video, you know that stock is absolutely smashing it. So I was 100% right on that. First of all, who are Alibaba and what do they do? They are one of the world's largest e-commerce companies. Not only that, they are in the top 10 of the biggest companies in the world. They are based in China, and this is where a lot of the issues come and why the stock price has recently dropped. So if you're familiar with Alibaba, you're probably familiar to something like this where there's a lot of Chinese goods that you can import to pretty much any country in the world. However, they have a lot of subsidiaries. The subsidiaries that they have are these. If you're Chinese, apologies for the pronunciation, and they're related generally to e-commerce, but there is a few more. So the first one is Taobao, which helps it with its e-commerce. Tmall, so it's linking in small businesses back to the e-commerce platforms. Next one is Ant Group. We're going to come back to this one, so make sure you keep watching the video till the end. Ding Talk, it facilitates remote work. 1688 is a wholesale marketplace for domestic trade in China. Freshippo, so it's a grocery retail chain. Kneo, a smart logistic network. Youku, which is China's YouTube version, is a long-form video platform and it gets billions of monthly views. So let's start on the sentimental analysis. Why has the stock price dropped and why has it been dropping almost throughout this year? We first need to start off with the Chinese government. China is run by a communist party.
Communism is not some faraway threat.
So it's completely different to Western politics. The Chinese government do not like one company or certain couple of people having a lot of power.
A new power is rising.
So in early March, what they did, they fined Alibaba of $2.86 billion for an anti-monopoly probe because they were dictating they had a monopoly on various things. And you can see Alibaba has a lot of subsidiaries. Next, we come on to the issue with Ant Group. When we do the technical analysis, you can see how far the Alibaba price went when they were going to IPO Ant Group. And you can see how far it's dropped due to the same reason. So Ant Group is an online payment platform and they also give out loans. Now, the lending part of Ant Group, China wants as a separate entity, and that is Ant Group's most profitable division. Not only that, China also wants Ant Group to share its data with the Chinese government because China claims big tech monopolies come from control of data, so they want a share of that pie. And there's also been a secondary issue of the Evergrande, though it's not really directly linked to Alibaba. But because it's a massive company not being able to pay its debt in China, a lot of the Chinese companies are interlinked. Now, all this has scared investors away. But one thing always to remember is every action in the stock market is always an overreaction. So let's start looking at the fundamental analysis now, because a business is only as good as its balance sheet, and you're in for a surprise. Okay, let's start with the valuation. So currently, Alibaba has a market cap of $393 billion, which is ridiculously massive. What I'm going to do is I'm going to compare it to Amazon. I know Alibaba and Amazon are not exactly the same, but it's the closest thing that I can find to Alibaba because Amazon is massive. So currently, as you can see, it is below its fair value. The fair value is worked by taking all the assets, taking on any debt, and giving a value per share. If we go onto Amazon and look at its valuation, you can see Amazon has a market cap of 1.7 trillion, which is ridiculous. Okay, and it's saying currently Amazon is undervalued by 32.6%. and Alibaba is undervalued by 40.4%. The next thing we need to look at is past performance. Remember, this is a business. The whole point businesses exist is to make money, is to make profit. So you can see here, the last 5 years, an annual growth of 30.4% for Alibaba, which is ridiculous. And you can see here, look at that trajectory. It's almost an exponential increase of its revenue, and you can see its earnings and profit margin. So in the last quarter, it made a 19.2% profit margin, which was in June 2021. Now, if we look at Amazon for comparison, Amazon has been again doing ridiculously well, 48.4% earnings growth for the last 5 years. And you can see the revenue and the earnings. Last quarter, Amazon made 6.6% profit. So Alibaba is much, much higher at 19.2%. The next key thing is we need to look at the financial health. This is really important when it comes to companies, and I think a lot of people overlook this. Assets is the value of everything that they own, and liabilities is the debt. So if we look at the short-term assets and liabilities, it's pretty much low. The key thing is look at the long-term assets and liabilities. It is ridiculously low. That is a very, very healthy company to me. If we go to Amazon for comparison and we look at that financial health, you can see the short-term assets and liabilities, it's not looking particularly great. And even the long-term liabilities, so it has almost about 50% debt compared to its assets, compared to everything that it owns. Now, if we go to Alibaba's balance sheet, this will just give you an overview of its assets, liabilities, and equity. So the company financially is very healthy. There is no way anytime soon that Alibaba is going to have any financial problems. Even if they have to pay a couple of £billion in fine, that would not be a massive issue for them. If you go to Amazon and start looking at their balance sheet, you can see they're still a very healthy company. They do have a large amount of debt, $52.3 billion US. Now, if we go back to Alibaba and I just want to look at the ownership. So it's broken down like this. In Alibaba, 40% are institutions. The general public is 31%. And remember, a lot of that general public reside in China itself. And then you have the public companies and individual insiders. If we go to Amazon and look at their ownership, you can see majority is institutional investors. The general public around the same, about 30%, and very small slivers of individual insiders, state government, private companies. So when we look at the two, for me, Alibaba is a very, very healthy, financially healthy company. So I've got no worries on that front. Now, we're going to start the technical analysis and see what that shows us. So when it comes to technical analysis of Alibaba, you can see it has been literally falling since, you can say, 27th of October. So in the last month and a bit, the price has just kept on falling and falling and falling. However, there are a couple of key things I want to bring to your attention. The first thing is if I go onto a weekly chart, you can see that it's coming close to a strong support level. And the last time this price was 31st of December 2018, almost 3 years ago. What I've done is I had an initial support along here, because the last time it was around this price, around $160, was around June 2019. So it's gone past that support. However, I am pretty sure it's not going to surpass the 132 mark because the company financially is just so good. You can also see this massive peak going up around October 2020. This was due to the IPO of the Ant Group. So Alibaba wanted to put an IPO out for Ant Group, and obviously that's a very profitable company, one of its subsidiaries. And you can see the stock price went ridiculous. It went through the roof all the way to around $320. And now it's come crashing back down. So from that high of October 2020, it's gone down 55%. Another thing I want to highlight as well, we also have a quarterly earnings coming up soon. And the consensus of that is looking good. And I think Alibaba will surpass the consensus as well. If we also just look at the volume, you can see where the peaks in volume are. So we had a peak over here, a big sell-off, and then it was sort of flattened out. Then we had another peak here, a couple of peaks there, and we had this big sell-off here. Now the volume has started to dry out a little bit. However, I think that will come back. Especially there's a Chinese holiday coming up for about a week, I think they have, from the 1st to 7th of October. Once that is over, I think a lot of the Chinese investors will come back, they'll see it, and they'll see that is a great buying opportunity. Now, I actually went in slightly early on Alibaba. I went in at $150. What I'm going to do, I'm going to average down. So I'm going to keep buying more and more until I average to around 147, because I have a strong conviction it'll go back to its 200-day moving average. And its 200-day moving average is this line. So obviously after probably a couple of weeks, the 200-day moving average, my profit target is around $190. So from my price of around 147 to around $190, we're looking at a 30% increase, but it is not a 30% increase. It's going to be a 90% increase, because what I've done is I've invested into a leverage stock, which is 3x Alibaba's price. So if Alibaba goes up 30%, times it by 3, I'm going to be up 90%. That's how much conviction I have in Alibaba. Now, it may take some time. It may take probably not this quarter, potentially next quarter, to get back to that price, to get back to the 200-day moving average. And remember, if you want a free share worth up to £100 with Trading 212 or free trade, make sure you open an account using my link below. Deposit £1 and you get a free share worth up to £100. And I use Trading 212 to buy my Alibaba shares. I'll appreciate a like on this video and a sub, as it really does help.